Welcome back to the Williams Real Estate Channel. I'm your host, Geordie Williams, and today we are discussing the new Trump presidency for the next 4 years and the potential impacts to the Australian economy and the Australian property market. So, without further ado, let's get into it. So, I guess before we get into Trump and his policies and the potential implications, I think it's important to understand Trump himself, his background, and where he came from and his career. So, Trump on the left, Donald Trump, and Frank Trump on the right, he's Trump's father. Trump's father started building construction in the 50s and 60s, building government housing in Brooklyn, Queens, New York. So the style of housing is these high-rise apartments, affordable accommodation for the government, providing housing for the government, but then also building and selling units for himself. So that's where the business started in property development in New York. Trump then took it to the next level and then went to New York and started building high-rise apartments, prestige high-rise apartments, such as all his Trump Towers. So he's a property guy, property construction guy. He then also had casinos in the late 80s, early 90s, which inevitably went broke in the 91 recession. So the last, well, not the last land-driven downturn, but the land-driven downturn prior to the GFC, where interest rates got to 17, 18%. We went through a big downturn, and the people that were using his casinos prior to the lead up, so he was printing money the years leading up, and then once the land-driven downturn hit in the 91, 92, people stopped going to his casinos and spending money, and he couldn't service the $3 to $4 billion worth of debt he was carrying against those assets, so he had to fold on them. He then recovered out of that, and then today, I mean, the Trump organization is worth 7 or 8 billion and has multiple high-rise apartment buildings, Trump Towers, and also diversified across golf courses around the world. So he is a property guy. He's got vested interest in property, so he carries probably billions of dollars in debt and has billions of dollars in assets. So you can see how his policies, his key policies, are vested in his interest in the property game. So those that understand, I guess, the property game, the construction property game, would support Trump's policies because ultimately he will do things in his best interest to ultimately boost his own position, but then also obviously make America great again is his slogan. But obviously he wouldn't do anything that's going to hurt his own position and his holdings. So that's what you can explain now in his key policies and how I believe it's going to set off a new era for property expansion in terms of values, not just in the States, but globally. The US leads the 18-year land cycle. And that's why we keep a big focus on what's going on in the US and not just Trump, but also the housing market, the developers, the home building developers, because they lead the cycle. And historically, over the last 200 years, Australia has been trailing 6 to 12 months behind the US. So Australians who are property investors would want to focus and keep an eye on what's going on in the US, because if the US is strong and prosperous, so will be Australia. So key points from the top: drill, baby, drill. He's going to drill oil to supply around the world in order to make the US, firstly, energy dominant over Russia and the Middle East and Saudi Arabia, because the US has just as much oil than the Middle East, but they're just not tapping into it in the last few years. obviously because they had the Democrats in, very left, green policies. They didn't want to use the oil because of the environmental impacts, but ultimately they still need oil for all their cars, transport. So they ended up just buying it through the Middle East, which is why inflation has kicked off, and it's why we're paying, near $2.5 a liter these days. Is because the US over the last 4 years has not been supplying as much oil as they could do to the market. So therefore, the Middle East currently has a monopoly over the oil. So on his first day in January, he's going to be drilling and he's going to be bringing back oil prices to, $40, $50 a barrel. So don't be surprised if next year you'll see $1.20, $1.30 a litre at the petrol bowser. So that's the first indicator that's going to provide a lot more people disposable income. That's ultimately going to get soaked up into property prices and the land market. So that's first key policy. Drilling oil lowers energy costs and inflation as well. So when oil's high, the cost of transport's high. That all feeds into transport, into trucks, into transporting goods around the world, planes, shipping containers. So when fuel prices, 80% higher than historical averages, that just gets passed on to the end consumer. That's why, the cost of food, the cost of any goods, not necessarily services, but mainly goods, is inflated over the recent years, is because it's been exacerbated by the higher energy costs, which has been coming out of the Middle East, because they can pretty much dictate the price that they want because the US is not providing the oil. So by drilling oil, he'll lower energy costs. We'll feel that in Australia as well. So we'll start importing goods from overseas at a lower rate because the amount of cost of energy has been reduced out of the end product. So that'll be good for inflation. Ultimately, once energy costs and inflation comes down over the next year, 2025, that's going to allow people first to have more disposable income because they're not spending as much at the petrol bowser, at the grocery store, buying goods such as new iPhones, house equipment, material, so forth. So then they'll ultimately allow him to then drop interest rates. So interest rates are still currently restrictive according to the RBA and the Fed. The Fed's dropping rates now. I think the Fed's getting probably a bit nervous of Trump coming back in, so they're getting ahead of the curve because they see what's coming. Historically, Australia trails 6 to 12 months behind the Fed, so the RBA will probably be in a position towards the back end of 2025, and by 2026 we'll be reducing rates as inflation comes down. So then they'll allow inflation to come down. Then once inflation comes down and interest rates can come down, he'll then be able to start cutting taxes for people to 15% plus no tax on tips over time. So can be, when you cut taxes, it also then allows more disposable income. That can be inflationary, but if he's bringing inflation back down, it'll offset the potential inflation that people are worried about. So more disposable income, that means people can borrow more, they can buy more assets, they can invest more. It's going to set off another big property speculation boom in all markets. All stock markets are all hitting all-time highs. Property prices are going to keep hitting all-time highs. And Trump puts their own KPI on himself, being the markets. If the markets are hitting all-time high, he believes that is a good thing to measure his success. He'll also apply tariffs on other countries to raise funds to then pay down US debt, and then also fund the shortfall of the reduced income tax that he will be taxing the US. So that's also good for the US, putting them in a more financial stable position. They've got, over 31 trillion worth of debt, currently federal debt, and they're not even keeping up with the interest repayments just on the debt. So it'll be good to see the states get in a better financial position, and the way they'll be able to do that is by raising tariffs on other countries that use a lot of the exports from America in order to raise funds to pay down debt, but then also help protect businesses in the United States. So if you don't believe me around inflation, if you're skeptical and you think, there's a lot of people talking about Trump's going to set off inflation, I don't believe so. Just take a look at what happened in his last term between 2016 to 2020. So inflation was at 2% in the States and similar in Australia. It wasn't until I guess we went through COVID and then the amount of stimulus that has been pumped into the system over the last couple of years that has fueled inflation, but also the green policies that the states have been running over the last few years and not tapping into all the oil that they have has also fueled the inflation because ultimately it all comes from energy. So it's coming down, it's heading in the right direction, but I believe it will be sustainably within that 2%, even lower potentially once we go through the next land-driven downturn, which is good for interest rates because that will then have a flow-on effect to interest rates. As you can see, interest rates are higher in the last couple of years. The Fed's starting to cut rates. Potentially that's because they're coming off a more restrictive position, but also Jerome Powell may be even worried about his own job because he knows Trump's coming back in and he wants low rates. Anyone who owns property understands that you want low rates, your assets cash flow better. It allows people to borrow more credit to buy more assets. If people can borrow more credit with lower rates, assets go up in value and it becomes easier to cash flow. So it's a really good position to be in when rates are lower. So Trump wants low rates, obviously for his personal reasons, property guy, but then also he knows it'll have a knock-on effect to the global economy and it'll set off the markets to the next level. And that's his main KPI. If the stock markets, property markets are booming and people are becoming more wealthy, then that is a success story that he believes. So as you can see, lower rates, between, near 0 and 2% in his last presidency, similar in Australia. So I believe over the next year or two, rates are going to continue to come down in the US, and then Australia historically trails 6 to 12 months behind the US. So interest rates, they're coming down, as I said. So this is Jerome Powell, head of the Federal Reserve in the United States. So Trump will have oversight initially over the Fed to make sure that, I guess, he's driving rates down to the 2 to 3% mark. And I wouldn't be surprised if Trump tries to sack him and get rid of him and get someone else that would listen to what Trump wants to do and get rates back down to 2 to 3%. So, and then Australia, I reckon the RBA by 2026 will be dropping rates anyway. 27, but they historically trail 6 to 12 months. So this is a good leading indicator that rates coming down. Once he gets the economy stabilized, I believe he'll then move on to cleaning up all the mess, all the wars around the world. So I think he'll start initially with ending the war in Russia and Ukraine. How he would do that, I believe he will firstly cut off the oil supply pipeline that Russia provides to Europe, that like what he did in his last term. He'll then start supplying the oil to Europe. So then Russia will lose a lot of revenue from that oil supply to Europe. The whole of Europe is pretty much the same size as the States when you add up all the countries individually. So that's a massive demand for oil. So Trump will start supplying that to become obviously energy dominant, to use that as leverage over Putin, but then also apply tariffs. So they buy anywhere between 20 to 30 billion of goods from the US every year. So he could even slap a 100% tariff on that to use as leverage to cut a deal ultimately at the end of the day to get Russia out of Ukraine. So don't be surprised by early next year, I think early to mid next year, that the Ukraine war will more or less come to an end and people will be moving on. Same goes for the Middle East. He'll apply tariffs to any country that tries to buy oil from the Middle East, like what he did back in his previous term when he's applying tariffs or threatens to apply tariffs to countries that buy off the Middle East and say, well, don't buy off them, but you can buy off us. And if you buy off them, you can't do any business with the US. It doesn't give the countries a choice because the US provides so much goods and services around the world. So the Middle East will end up going broke. They won't have any money to keep funding terror because wars are very costly. Obviously, the damage that they do, but then also funding the wars with all the ammunition, the labor, all the materials, everything. So they need significant amount of money to fund wars. And I believe the only reason why they've been able to fund wars in recent years is because they've made so much money because the US hasn't been pumping oil and supplying oil to the market. Therefore, there's been a high oil prices and they've been making a killing and they've been able to fund these wars. So Trump will come in and cut that straight off, cut the gravy train off, and then all the wars will pretty much come to an end in 2025 and 2026. Trump will then move on to put pressure on China. He's obviously believes China is the next rising power. He'll put tariffs on China to raise funds to protect businesses in the United States, such as car manufacturing businesses, jobs in the United States to drive more revenue into the United States. China will probably then have to resort to fiscal policy, which is printing money and spending in their own economy to get through the next 4 years. So building infrastructure, building new property to offset this cost of what Trump's going to then put onto them. Fiscal policy will drive growth in China. Therefore, China will require more Australian commodities such as coal, liquid gas, iron ore. That's going to set off another commodity boom for Australia, and that's going to be very good for Australia, especially for property in WA and Queensland. It's going to set off another roaring period like what we experienced between 2005 through to 2012, where we had the last commodity boom. So I believe that's good. Good to have a strong US economy and putting China in check, obviously for security reasons, but then also if China is forced to start fiscal policy and pumping their economy, they're going to need materials, commodity materials, which Australia provides. So we'll get the benefit of that. Trump will then move on to NATO and make them pay up. I mean, NATO have been propped up for many years, so he'll make them pay their fair share to reduce the financial burden on the US to help him continue to pay down the amount of federal debt that the US has. So that will ultimately strengthen the balance sheet for the US. And we'll be entering a new era. He'll be using people like Elon Musk, very switched on, obviously, brilliant, smart, one of the smartest people in the world, to get involved in government to cut regulations such as banking and business regulations to allow the private markets to run and not be restricted. He'll then move on and use people like Elon to go through the government, like doing a business audit and cutting all dead wood, cutting all corruption and red tape, as there is, I guess, a lot typically in government. So it'll be allowed to reduce costs, reduce inefficiencies, improve productivity, and he's also pro-crypto. So Trump and Elon. So don't be surprised if crypto can now be used as security to buy property, which is ultimately going to all feed on itself and set the markets to its next level over the next couple of years. When you overlay all this information over the 18-year lens cycle, it is a cracking time to be invested in the markets. We are in the final stages of the expansion, 14 years of expansion prior to the next GFC-like event or land-driven downturn. So now is also more critical than ever to be cautious with your investments. Do not get carried away with the herd. Do not buy any new and off the plan stuff. And it's becoming dangerous now to continue to keep buying up in Brisbane, Perth, Adelaide over the next couple of years, as those markets will go through extraordinary growth, but then they'll ultimately top out and go through the next downturn. So Trump will set off this boom. Every land boom dwarfs the one before. So the last land boom we experienced was between 2002 to 2007 prior to the GFC. So every land boom dwarfs the one before, and every land-driven downturn dwarfs the one before. So this boom is going to be the biggest in history. It's going to be followed by the biggest bust in history. So we are active in the market. We're trading the market. Personally, I'm adding value into all my assets in Queensland, and we'll be offloading some in Queensland come the peak, and continue to keep buying up in Sydney and Melbourne, as they will then lead again in the recovery phase that will commence around 27, 28 and onwards. So very exciting times ahead, but it will be a very turbulent time as well. Now, it is, as I said before, very critical to get your asset selection and your market right, as it's a fragmented market. It's not everything is going to be going gangbusters, and even the assets that are going gangbusters are not necessarily the right assets to buy. You want to be buying in the suppressed markets that have been suppressed for a number of years, that are primed for growth for the next phase. So to just dig under the hood a little bit, I put this in my monthly market updates, but thought it was probably worthwhile putting it here as well. This is where I currently see the markets at. We've got, as you're probably aware, as it's now mainstream, Brisbane, Perth, Adelaide continue to hit all new high levels. I believe Adelaide's more or less coming pretty much 10 or 15% from the top. Brizzy probably 30, 40% from the top. Perth 40% from the top. Once they top out, they'll then go through a period of 10 plus years of negative to flat growth. New South Wales has passed the peak. It's now starting to soften. Victoria is softening. Sydney and Melbourne have softened for up to 10 years. Melbourne, I believe, is starting to bottom out in certain pockets. Sydney's approaching the bottom. So we are now sowing our seeds and buying up in Melbourne and Sydney in preparation for their next growth cycle, as we only advise our clients, as what I do is only buy between negative, median, and rising rents. By the time the rents rise and prices start to rise and it becomes mainstream and everyone kicks on and starts rushing in like Brisbane, Perth, Adelaide are now, that's when it's too late, and you should be looking for the next suppressed market to capitalize on the future growth opportunity. So if you need help, reach out. Happy to chat anytime. Just a bit of housekeeping. This content is just general in nature, by no means financial or general advice. I'm not a financial advisor or economist, but these are my thoughts based off my studies, my experience, and my own investing and my skin in the game. If you need help, I can help you from a buyer's agent perspective to buy investment grade property, to build property portfolios. 10 and 10 years is the services I can provide you. If you're on 150 grand income, 10 years, very achievable. If you're on 200 grand plus, you'll shit it in, easy get in, 10 properties within 5 years, provided you're getting the right asset in the right market at the right time. I've got to 17 properties in 7 years or so. So if I can do it, anyone can do it. And the people that I'm helping these days are doing even better than what I did, because they've got the benefit of hindsight. So get in touch today. Happy to chat where you are, where you want to go, and how you wish to navigate. And I can help you navigate the boom and bust times ahead. Very excited. Get ready for the market to be rocking come 2025. Until next time, thanks for watching.